Hello, traders. FX Pip Collector here. Today is Wednesday, April 30th, and this is my analysis for the SPX or the S&P 500. If you haven't done so, definitely do check out my free Discord channel, which is linked down here in the corner at the end of the video. And also make sure to check out my website, fxpipcollector.com. Watch the video on my home screen to learn more. So anyways, the S&P 500, I wanted to start on the weekly time frame because that's where you can really see this five-wave move. We have the end of a correction way back here, and then we have an impulsive move up, corrective move down, very impulsive move up, and pretty impulsive move down. More than likely, this is a wave one, this is a wave two, this is a wave three, and we have a wave four. Now, normally, especially with Elliot wave, you would expect to see somewhat of a three-wave pullback before you actually continue the uptrend, which I still think is a very likely possibility. The only problem is with the stock market, sometimes you get very impulsive moves against the trend, and then it just keeps on trending up. Because, I mean, you can't really deny that the indices are basically a never ending uptrend. So, every once in a while you get a very impulsive move down, and then it just keeps on going. Impulsive move down and keeps on going. So, this could just be an impulsive down, Fibonacci belts, and then just continue the uptrend. So definitely be aware of the never-ending uptrend on the very high time frames. Now, when you start going down to like the daily time frame and preferably the 4 hour time frame, this is where, I could definitely say this is potentially a 1, 2, 3 way pattern. And we had a 61% fib bounce. And potentially this really could be just an A, a B, and a C. It's just a very impulsive ABC. And it just keeps on going and going and going and eventually makes new highs. So that's possibility number one for me. Possibility number two is that this right here really is a wave A, and that we're in a wave B right now. And a wave B would be a correction to the wave A. If that is true, then we would go to one of these two Fibonacci levels, make like a double top, make a break of structure, proving that it's a wave B, and then going back down probably to these lows. So either possibility, we should better recognize it because if it really is a wave B, then we should get a really nice Fibonacci bounce, a really nice break of structure, and a really nice impulsive move to the downside, which we definitely do not have yet. And the fact that we don't have that yet means that if you are trading the very short time frames, I would definitely still be recommending longs. We had a very impulsive move down just recently in the New York session today, but we have to realize that today is the end of the month, and the end of the month can definitely have some volatility. I personally would still be looking for longs. I would definitely still be taking it up to one of these higher Fibonacci levels, either the 61% or the 78% that I just sold on the 4 hour. Like I said, if we make some sort of like a double top at a fib level with a nice impulsive move, nice break of structure, that is what would tell me that it is a wave B and that we need to stop looking for logs and start looking for shorts. If it never makes that shape right there, but just goes up, bounces, doesn't break structure, and just keeps on going, then there's really no need in looking for shorts. Really, I would just continue to hold on to my longs and potentially continue to look for more longs. So anyways, don't forget to like and subscribe. And as always, thank you for watching and happy trading.